Good morning. I'm Matt Trogdon of the Motley Fool, here with my good friend Morgan Housel.
How you doing?
I'm doing fine. How are you?
All right.
Good. So last week you wrote on Tuesday and Friday your Tuesday story, how to be less stupid at investing,
Right.
a topic you write about a lot.
Right. So I think there's a difference that people need to make between trying to get smarter at investing and trying to be less stupid at investing. And the difference is, if you're getting smarter, that means like you're starting at average and going up.
Right.
You're an average investor and you want to be better.
Right.
Getting less stupid means you're below average and you need help getting back to average. I think that's an important distinction to make, because most investors we know statistically are below average. They're earning a return below of what they could have achieved in a basic index fund. So they need help getting less stupid before they need to get help getting smart.
And are they aware of that?
No, I think almost no one is. There are a lot of studies that have, there's one study in particular where they asked people, how do you do at investing? What kind of returns have you earned as an investor? And then, so they just asked them, and then those investors gave them what they thought they earned. And then those researchers went back and checked their brokerage statements to see how they actually did.
Right.
And there was almost no correlation between how people thought they did and how they actually performed. And actually, the people who performed the worst in reality thought they did the best.
Right.
So it's actually the other way around. The investors who think, oh, I'm doing a great job, are actually some of the worst investors out there.
So it reminds me of that statement that 2/3 of drivers think that they're above average.
It's exactly the same with investing, right? I mean, it's that Lake Wobegon effect of, because I talk in the article, people have to feel like they're making good decisions just in order to go about their day.
Right.
They have to be able to think, I'm doing the right thing, I've done okay, I've made some good decisions. And I think they're willing to do mental gymnastics and tell themselves stories. If they're not making good decisions, they'll just convince themselves that they are. So the article goes into how do you fight this? How do you become less stupid? And the way I talked about is you need to hang out with people, surround yourself with people, consult with people who disagree with you. Because those are hard. It's very difficult to do. It's incredibly difficult to do. But people who disagree with you are the ones who are going to point out your errors. And if you surround yourself with people who do agree with you and think in the same way you do, and are in the same emotional state that you are, that's just confirmation bias. And they're just going to tell you what you want to hear, whether it's right or wrong. And that just leads people down rabbit holes of bad decisions. That's why they keep making the same bad decisions.
So I remember when I left grad school, and I learned a lot about history and politics in grad school, and I thought, okay, now I have enough knowledge to go find people that I disagree with and have a reasonable debate. And then I got out into the real world and found that nobody wants to have a reasonable debate. And
that's why I think,
how does that happen for these folks financially?
Well, I think that's why in so many fields, whether it's politics or economics or investing, it's just littered with bad decisions and people hurting themselves financially and whatnot, is because it's so difficult to hear someone who disagrees with you and not be defensive about it.
Yep.
It's very difficult to be completely open-minded and say, maybe this person knows more than I do, or maybe I haven't thought about that point of view. It's incredibly difficult to do. And in the article, I probably made it seem like it's easier to do than it really is.
Well, you mentioned in the article that you wrote a similar column a couple weeks ago and got a response of, hey, stop being such a jerk.
Right. So it's, I wrote a column a couple weeks ago, just a list of things that I've noticed that investors and people in general just kind of do that are kind of stupid. And some of the responses I got was, okay, well, if you're going to tell us how stupid we are, you need to tell us how to be less stupid. So that was kind of the impetus for the article.
All right. Who do you read that you disagree with?
Well, I never said I do this myself. No, that's not true. I'd say what I do. Matt Copenheffer, who's a fellow fool here. Matt and I are great friends, and we agree on a lot of things, but he thinks very differently than I do. And it's not so much a disagreement, but just how he thinks differently, he'll point out things that I would have never thought of on my own. So Matt and I pass our personal financial information by each other pretty frequently.
All right, very good. Friday, you took on the financial news machine, basically saying that...
Which is us, by the way,
Which is us. Basically saying that the stuff we're putting out serves an audience that's up here, but most people are down here.
It's the exact same concept of people who they think they're starting average, and they want to go out and seek financial news, whether they're watching CNBC or reading the Motley Fool even, financial news that's going to bring them from average to above average. But in reality, they're starting from below average, and what they need help with is getting back to average. So the point of the article was just pointing out that when you're reading financial news yourself, reading financial articles or watching TV or whatnot, you need to understand where you are on that spectrum. If you are an average or an above average investor, then reading about how to beat the market when can be great. That can help you. And I said in the article, I really believe that if you're an avid investor,
Yep.
the state of the financial media today is the best it's ever been. There's so many smart people out there that you can read for free, which is great.
Yep.
But most investors are below average, and they need help getting back to that point. And it's important to know that if you are that below average investor, that so much financial commentary out there really doesn't apply to you. And
Yeah.
it's dangerous if you don't know that. So you need to know about yourself what the pundits on TV don't know about you,
Right.
which is your own risk tolerance, your own experience, your own income, your job stability. The pundits don't know that about you, but
Yep.
you know about yourself, and it's important that you need to know that information and know how it applies to all the financial media that's out there.
Yeah, I think another point adding on to that is a mistake a lot of people make is thinking that if I can just get the one stock idea that I need. I know I get that a lot when I talk to people that know that I work at
Right.
the Motley Fool. Hey, if you find a good stock, let me know.
Right.
But I always think, man, what's your financial picture look like? Do you even know what your financial picture looks like? Do you
Right.
know what you're paying in fees? One good stock isn't going to fix.
I mean, there's so much in the media where people say you should buy or sell this stock.
Right.
And I always want to say, well, who should buy or sell it? A day trader? A 90-year-old widow with a fixed income?
Yeah.
Like, those are two totally different people, but it's often passed off as this is just advice for everybody. And that gets dangerous in the financial media. And I honestly don't think that's the financial media's fault, because they can't know the risk tolerances of all their viewers, of course.
Right.
So I really think that the burden is on you, the financial viewer, to know it about yourself. So.
Well, hopefully people will read your work and begin to realize that. What are you taking on this week?
Yeah, but I don't want to give it away yet. It'll be related to how the Great Depression applies to today.
Very good. Thanks for your time, Morgan. Thanks for watching, Fools, and we'll see you next week.